an interesting panel discussion today with a broad range of panelists with different perspectives on the market, from occupier demand to investor demand. My takeaway was that there were some similarities in terms of how the European market is operating relative to how the Americas markets are operating, but also some unique differences as well. It was very clear to me that there's an evolution happening across the logistics market, both from an investor perspective as well as from a user-occupier perspective. The big thing that's different, especially from a user demand standpoint, is defense spending in Europe and the increase in that over the foreseeable future relative to a more stable market in the Americas. But many of the other same trends are happening in terms of advanced manufacturing, battery storage. We have a big chip manufacturing, semiconductor manufacturing in the U.S. that's helping drive demand across various markets. For the Americas specifically, we're seeing fundamentals improve. Supply pipelines have tapered off. Demand is stable, but a little bit more muted than it was at the peak of the market. So I think the fundamentals will improve. I expect yields and pricing to remain relatively stable. We have more capital returning into the market, but we've also got a lot more opportunities as sellers start to bring more opportunities to the market. So I think that'll stay relatively balanced, and that assumes that the relatively stable long-term interest rates over the foreseeable future.